안녕하세요. 다들 좋은 한 주 보내고 계신가요? 마켓이 다시 크게 내려가고 있어서 속상하신 분들이 많이 계시죠? 전에도 말씀드린 적이 있지만 이렇게 불안한 마켓에서는 개인적으로 마켓 크래시와 불안한 마켓을 여러 번 경험하신 분들의 인사이트를 듣고 제가 불안해하는 부분들을 질문하면서 이런 분들의 답변을 듣는 것이 실제로 제 투자에 많은 도움이 되더라고요. 그래서 오늘은 ETF 분야에 무려 20년간 몸을 담고 2016년에 본인의 ETF 회사인 GraniteShares를 세운 GraniteShare의 CEO인 윌 와인드를 모셔서 인터뷰를 했는데요. 역시나 생각보다 인터뷰가 오래 지속이 되어서 인터뷰를 2부로 나눠서 영상 편집을 했습니다. 오늘 올릴 1부 영상에서는 지금 저희가 경험하고 있는 높은 금리로 정말로 2024년, 2025년까지 지속이 될 경우에 발생하게 될 주식시장의 변화와 미 연준의 소프트 랜딩이 과거 크래시들을 뒤돌아봤을 때 정말 실현 가능한 일인지, 그리고 오일 가격의 인상으로 다시 한번 잡혀가고 있던 인플레이션이 오르게 될 가능성은 얼마나 되는지에 대한 인사이트를 나눌 생각이고요. 마지막 부분에는 윌이 생각하기에 지금처럼 불안한 시기에 투자하기 가장 적합한 ETF가 어디인지도 나눠주셔서 여러분들의 투자에 분명히 도움이 될 거라는 생각이 듭니다. 자, 그러면 디스클레이머만 듣고 영상 바로 보도록 하겠습니다. 지금 무무에서 새로운 어카운트를 만들 경우에 무료로 주식을 16개나 주는 프로모션을 하고 있는데요. 어카운트를 만들고 100불만 디파짓 하셔도 주식 5개를 무료로 받게 되고 1000불을 디파짓 하시고 60일간 그냥 어카운트에 두시기만 하셔도 주식 15개를 무료로 받게 되고 5000불을 디파짓 하시고 60일간 어카운트에 두었을 때는 주식 15개와 구글이나 테슬라를 무조건 받게 된다고 합니다. 이렇게 주식 16개나 무료로 받을 수 있는 기회를 놓칠 이유는 없다는 생각에 여러분들과 이 프로모션을 나누고 있습니다. 자, 그 외에도 제가 진행하는 페이트리온 서비스를 통해서 15불에 매수한 테슬라나 87불에 매수한 엔비디아, 그리고 올해 초에 멤버들과 함께 90불대 매수한 아마존, 구글이나 7불에 매수한 팔란티어와 같은 장기 투자 종목들의 매수나 단기적으로 차트 분석을 통해서 리스크 테이킹을 가능한 적게 하면서 매달 수익을 챙기고 있는 트레이드들, 그리고 제가 보유한 주식을 단 한 주도 팔지 않고 프리미엄으로 수익을 내는 콜 옵션과 함께 격주로 줌 미팅을 통해서 마켓이나 제가 눈여겨보는 주식들에 대한 인사이트를 나누고 있는데요. 이런 서비스에 관심 있으신 분들께서는 아래 링크를 클릭하셔서 지금 같은 마켓을 함께 헤쳐나갔으면 좋겠습니다. 제가 만든 컨텐츠들은 어디까지나 정보 전달을 위한 영상들이기 때문에 절대 영상만 보시고 주식들을 매도하지 마시기 바라고요. 본인 스스로 반드시 리서치를 더 하신 다음에 판단을 내리시기 바라겠습니다.
Hello everyone, I'm very excited today to have Will Rhind, the CEO of GraniteShares, on our channel, where he will be sharing his insights and experiences of the market, and I'm sure it will be extremely helpful to many investors that are watching this interview. And so Will, I really want to thank you very much for your time, since I know that you're very busy, and it's actually an honor to have you on my channel as a guest.
Thank you so much, Andrew. Really appreciate you having me on. It's a pleasure.
First of all, on the most recent FOMC meeting, we didn't have a raise in the Fed fund rates, but I think a lot of investors were worried that the high rate would be maintained, longer than expected. And I was wondering, from someone that has been through a lot of, major crashes, were you actually surprised with the decision of the FOMC meeting? And would love to hear your thought on what you think will happen in the remaining period of 2023.
Yeah, no, I wasn't surprised. And part of that is because I've been probably in the camp of saying that interest rates are too high already. And, that the effects of that are already starting to be felt, particularly in the real estate market, just as one particular obvious area. But I think rates are too high. I don't think there's a really strong case for increasing rates from here. They may do another 25 basis points, a quarter of a point between now and year end. But like I said, I'm not sure there's really any data to back that up. And I don't see a case for it at the moment. But again, we'll have to see sort of what, data transpires between now and the end of the year.
So I think a lot of people are saying that raising the rates are actually working, and we do see the inflation coming down. But are you more on the side where you think the soft landing is actually working for the economy? Or do you think that, no, there has to be a hard landing, this has to reset for the economy to come back?
I think that we're already in a soft landing. And in some respects, you could even make an argument to say that the recession was last year. And, we've been in this sort of recovery mode / soft landing since then. I think that the risk you have with, we don't know how it's going to play out still, the interest rates, depending on how long it's allowed to go on. will really depend on whether we see a hard landing or whether we can, still muddle our way through this particular soft landing.
The interesting thing that I observed is that I think with the inflation, a lot of people, I think the credit debt is at its highest ever in the US. And, you have to use a credit card to live, but the inflation is still high. And I think if the economy slows down and if there are, let's say, unemployment or a layoff or something, some kind of that, some kind of event that happens and people start defaulting or not being able to pay off, do you think the unemployment rate right now, I think it's in a lag, but do you see some more unemployment happening with the economy if we have this high level of interest rate for a longer period of time?
Yeah, it's already happening. And really what's kind of behind the figures, because a lot of the times the figures that you see are painted in quite a positive light, that the economy is still creating jobs net. Behind this is a little bit of a different story. What's been happening for some time now is that a lot of high paying, white collar jobs are being lost and are being replaced by short-term temporary work, which is typically a lot lower paying.
So you're saying that you think the recession happened last year and you're positive of the soft landing, and we are at the stage where it is kind of at least getting better and better and better, and we're entering another bull market?
It depends on the trajectory of interest rates, because right now, clearly what's happening is we had this huge drop last year, really bad repricing of pretty much everything in the market according to interest rate expectations. We started this year with everybody saying there's going to be an imminent collapse and huge recession, of which that never happened. And companies managed to post good quality earnings, and they did that in Q1, did that in Q2, and we're already seeing the first companies come through early in Q3 posting strong earnings, which is why, the market is still being resilient. So I think this sort of tells you that the economy can handle rates at this level, for this particular time we've had it. My question is more, we can't sort of make a prediction around whether it's ultimately going to be a hard landing or a soft without really knowing the final trajectory for interest rates. Because if you told me that interest rates were going to be at this level for another few years, I think clearly the increased odds of there being a hard landing or sort of severe recession dramatically increase. So I think we don't know. And right now, if things were to stay the same, I think there's a case for saying that, we can get through this. However, if it's all about the interest rate expectations and inflation.
So, for people who might have a little more risk than just investing in the S&P 500, but they are looking for an ETF, would there be like a sector right now that you would at least, I would say recommend, but suggest that you think will grow in the next 10 years to just invest in that category of ETF and leave it?
Well, I think if you're talking 10 years on the stock side, you'd hope almost everything would be in that category within reason. But I think some areas that we like, large technology companies, so particularly US technology companies that are, in incredible commanding positions in their particular industries, but particularly the sort of top 7 to 10 companies. I think they still have a lot of room to grow, particularly this year, but in the future as well. A much shorter term view, Andrew, on the picks, if you will, would be commodities, just given obviously what's happened in the Middle East over the last week or so, that oil prices were already increasing since the middle of this year after being in taking a bit of a fall the first few months of the year. And so commodity prices are now going back up again. And this is something where we could see oil easily back over $100 a barrel, by the end of the year.
So you do think that oil will go over $100 per barrel?
I don't know for sure, but I think it's possible given everything that's happening in the Middle East at the moment, geopolitically. It climbed to $90 today. And so, it's not unreasonable to believe that you could see 100 by the end of the year.
I'm not an expert in oil, but I know that, petroleum goes into almost everything that we use. And if oil goes up to 100, do you see that the inflation that's coming down right now, there's a possibility that the inflation is not done and that it could actually rise up again?
Yeah, that's what happened in the last couple of weeks in terms of some of the inflation numbers that came out, albeit it's a small amount, but it's still kind of going in the wrong direction because of the increase that we've seen over the summer. in energy prices and food prices. So gasoline prices, increasing, and that all feeds into inflation numbers. So it could cause a problem again, but most likely this time it could be a little bit like what happened just before 2008, where, oil briefly rallied to almost $150 a barrel. Before then, the whole economy came down, and it went down to about 30, I think, at the low. So it could be one of those situations where you have a flourish in oil, and that creates a lot of demand destruction in the economy. And that's maybe one of the tipping points that causes the market to come down.
조금이라도 도움이 되셨다면 주위 분들과 나눠주셨으면 너무 고맙겠고요. 구독과 라이크를 해주시면 더욱 감사하겠습니다.